Hi there, are you interested in learning investing, but are you afraid of losing money in the stock market, or are you simply overwhelmed about the amount of information out there? What I found out was that if you start using some simple to use techniques and follow them step by step, it's actually quite easy to get started and you don't have to get overwhelmed at all. First, I'll be talking about the different types of investors out there and a style of investing that you feel comfortable with. Next, I'll be talking about the tools that you'll be using to actually start with investing itself. And lastly, I'll be teaching you how to buy stocks or index funds. And at the end of this video, I made available a white paper that you can download so you don't need to take notes at all. So let me stress one thing very clearly. There's not one type of investor out there. And there's also not a need to start with a huge amount of money. It can be done by everybody, by anyone. And before you start, identifying for yourself what type of investor you are is critical to understand what you're looking to achieve. I classify investors into 4 types. That is passive investor, defensive investor, an aggressive investor, and a day trader. All of these types of investors are perfectly capable types of investors. Now let me explain the first one, and that is the day trader. This type of investor is trying to predict day by day what's happening in the market. They can buy and sell stocks and are actively looking at increasing their profits on a daily basis. This type of investing is also one of the most stressful types of investing and the most hectic. You can say these guys have absolutely insane days. The people that tend to stick to this type of investing are risk-averse individuals, love adrenaline, and are the get-rich or die-trying types. As day trading is one of the most risky types of investing, it is also something that you need to have a very thick skin to be able to handle. Next, you got the aggressive investors. These are more long-term oriented, and these individuals are also still very active within the market, but not as active as day traders are. These type of investors will be active weekly. They will be actively looking for new opportunities, but they won't be trying to time the market. And this type of investor also does a huge amount of research, and they're basically trying to find companies at a discounted price for the future. And usually these types of investors are actually active within the investment field and are using this as a day job as well. You can say these guys are the sharks of the investment world. And if you've ever seen the show Shark Tank, you can see a very good example of people that are actually sharks. Usually aggressive investors have a mix of very aggressive investments and some defensive investments as well to have a balanced portfolio. Next, we get the defensive investor. And this type of investor love their research, is more focused on the long term. They check earning reports, they check macro and microeconomics. The more details these type of investors can get, the more they love about a specific company. And they don't like companies that are extremely hyped up by these gurus that this is going to be the next big thing. These type of projections make these investors cringe, and they really just would rather want to run away. And if they ever take a risk, they're pretty sure this risk is going to be with a very high reward for them. An example of a defensive investor, Warren Buffett, who is basically known for only doing defensive investments. And now lastly, we have the passive investors. And these investors are basically investors that want to maximize the return of the markets without actually learning too much about investing. Usually these type of investors would hire an investment broker or someone to manage their money for them. So for individuals that have a very busy day job and don't want to invest too much time, the passive investing is the best for you. Now that you have a clear picture of the different types of investors out there, you should understand which style fits best with you. Let me ask you a question. What kind of investor do you see yourself to be? Let me know below in the comment section and start talking about how to start investing. And the main tool is what's called a brokerage account. This brokerage account is basically allowing you to buy or sell your stocks or investment product. What brokerage account is good for you? There's so many choices out there, and there are many different types of investment brokers out there, and choosing the right platform for you is going to be very crucial. Within brokerage accounts, you actually have 2 different types of accounts. One is a cash account, and the second is a margin account. With the cash account is that you're investing with your own money. And with a margin account, you can invest with your own money, but you can actually lend $1 additionally for every dollar that you invest. And let me stress this. When you start investing, do not start on a margin account. The possibility that you're going to lose a lot of money is very high. Do not start with a margin account. It's very easy to open one, and I really want you to start with a cash account because it will make sure that you do not make too many mistakes. Remember, at the end of this video, I'll actually have a white paper available with all the notes, so you don't have to take any notes now. What I will go over is what I think is the most important tools for each type of investor. So let's start with the best brokerage account for passive investors. A passive investor will be looking for a platform that can help them trade automatically and do all of the work for them based on a specific set of criteria. So when I was looking for the best type of platform for this type of investor, I was looking for automated trading, fractional shares, and a whole bunch of different automations to help you set up the account once and then don't think about it again. And by far, from all of the brokerage accounts that I've seen, M1 Finance is by far one of the best ones out there. It even got rewarded by Investopedia for being the best automated trading platform out there in 2019. And as anybody can get started with them, I think it's the best investing platform for passive investors and beginning investors that are looking just to get started in the market. Now let's take a look at the defensive investor. And the defensive investor is looking for a platform that can help them do the research that fits best within their style of investing. So when I was taking a look at the different platforms for the defensive investor, I was taking a look at their research tools, their analytics, basically all of these different aspects that can help them maximize the amount of research that they can do for a specific stock. And after looking at a huge array of different brokerage accounts, I found that there were two different accounts for defensive investors, and they are Charles Schwab and Fidelity. Both of these brokerages provide a huge amount of information, and for a beginning investor it can actually be quite overwhelming. So if this style of defensive investor is for you, then they would fit for you, but otherwise I would really not recommend getting started with them. Charles Schwab can actually tailor towards a worldwide audience, whereas Fidelity can only do that for US citizens. And also, because they provide such a huge amount of different investment services outside of just investing, the defensive investor would be most happy with one of these brokers. Now, next we have the aggressive investor. And this investor is looking for a brokerage account that allows them to execute on really aggressive strategies. So these brokerage accounts need to be set up to be able to handle more aggressive strategies, but also provide the information that the aggressive investor is looking for. And for this type of investing, I highly recommend interactive brokers. And the reason why I recommend them is that they are one of the most used platforms by all institutional investors out there. They have a huge amount of tools that the aggressive investor can use, but most importantly, they have the lowest margin rates in the sector. You can actually set up a very aggressive strategy for maximizing your returns. And lastly, we have the day traders. And the day traders need a platform that can execute on lightning speed and be able to help them with all of their aggressive strategies day to day. But most important for them is a system that is very reliable. If the system ever goes out, that can cause them to lose a lot of money. So they need something that has been tested and tried for a long period of time. And here again, I would recommend using interactive brokers for this platform. This platform executes on lightning speed and is the most used platform by day traders by far, making them a super reliable option. And because their margin rates are so low, the risk for the day trader is much lower as their interest charges are lower as well. What do you think of my recommendations? Do you agree with what I'm saying? Do you have any brokerages that you work with that I've not mentioned? Let us know in the comment section below. Now, next is the most important part, and that is how to start buying your first stocks. But as promised, I will provide you with a white paper that you can download, which you can use on a link right on the top here. So let's dive right into it and go to the next video, which I'll be linking right here, and that's where I'm going to be teaching you how to buy your very first stocks.